We're up around 0.2%, and we're talking off air, and you were alluding to the fact that foreigners are net sellers of South African equities at this point. We're not really seeing very light volumes on the market front, which is quite fascinating given the fact that it is into holiday season. Do you think that we're starting to lose a lot of the appetite that we saw previously in 2011 and 2010?
I think a lot of that has been lost. If you look back over the last 12 months, the rolling 12-month net foreign transactions has been, I think, negative by about 25 billion compared to, I think, net inflows last year of 60 billion. So definitely a lot of those inflows that we've seen in 2010 have reversed this year, and particularly the last week or two, we've seen foreigners being net sellers of about 1 billion to 1.5 billion on most days on the market. That's only trading about 6 to 7 billion. You know, that's a huge impact, net sellers, foreigners. So I think a lot of US investors, Westerners, are saying, listen, growth in the US are not looking that badly, and it's not looking too great here either. And they have already seen some currency losses. They're afraid to see some more currency losses, the rand dollar.
Because in dollar terms, actually, the JSE All shares down far more significantly.
I think about 25% for the year, yeah, 22% for the year. And I think they're deciding, listen, growth not looking too badly there. And a lot of money is moving out again, not necessarily into the Dow yet, but it's definitely have moved the last 2 weeks out of our market.
And again, I mean, interesting to note that it's all about the economic side of things. We actually had S&P and Fitch still warning the US on its sovereign debt credit rating, and then we've also got this drama that is ensuing in the Eurozone, and one would think that when the ECB announces a 3-year funding in the form of almost 500 billion euros, one would be happy, but this coming to the fore as a negative outcome.
Well, I would say yesterday was actually a bit of a buy on the rumour, sell on the fact. I think most traders thought that it was going to be bigger, the rollover is going to be bigger than was originally estimated, and we saw the Italian and Spanish bond yields rally for about a week before the announcement, and yesterday they sold off right after the announcement. Classical buy on the rumour, sell on the fact. So
you were saying you were hoping for a bigger number than 490 billion euros?
No. I think most traders already were hoping for a bigger one, and it was starting to be priced into bond yields, in sovereign bond yields, and those just got you got some profit taking yesterday on those.
Would you say, Drikus, that this is a type of quantitative easing in a sense? Can we call it that? Some think that this is just stimulus, this is just increasing liquidity in the market.
Well, I don't think Germany would like to call it quantitative easing, but the ECB is going to find it very difficult to sterilize 500 billion euros. And in a sense, what actually, the question to ask is, what are the banks going to do with those funds? Are they going to just redeposit with the ECB like the American banks have done with the top funds? Or are they actually going to go out and buy some sovereign bonds with that?
Because this is similar to the top bailout that we saw.
Yeah, they're calling it let's up, you know. Yeah. So you can see it in that respect. So if they're not going to sterilize it, they might, to a certain extent, it's actual form of quantitative easing.
Well, if we see increased liquidity, this should actually spell much stronger local currency going forward and more flows into the South African equity market, surely?
Well, actually, yes, that kind of risk on trade, but we very closely linked to the European currency as a whole. It is our biggest trading partners, for one, and number two, we've got a lot of euros on reserve at the Reserve Bank. So a very important trading partner, a very important financing partner. And the thing is, I think the main thing that's been done yesterday is that proverbial can in the road, they've kicked it a long way down. They've given these banks, they've strengthened their balance sheets, and I think these banks can hold out another 6 months until, you know, the sovereigns get their books in order.
Do you think that it's just going to be bailout after bailout going forward, Drikus? Is that what you suspect?
Well, to be quite honest, Italy is still a big question mark. I think Spain's head is through. Anything below 6.5% on 10-year yields for the Spaniards are sustainable. So I'm not too worried about the Spaniards, but Italy is in trouble still.
Let's touch on some of these stocks in South Africa. Not much news flow out, but we had some interesting news from ArcelorMittal late yesterday, saying that a court ruling confirming that Sishen Iron Ore needs to supply ArcelorMittal with the cost+3 contract. So it seems that things are starting to move in ArcelorMittal's favour. A couple of years ago, we weren't really that convinced, and it seems that it would fall into Kumba Iron Ore's favour, and then ICT came into the fold as well. What is your view with regards to the new developments?
Well, I think if you look at what the strategy will be from the Department of Minerals and the Department of Trade and Industry, will be to they want our raw materials to get less raw materials exported and get more beneficiation and more smelting, more value add inside. And I think that's why the court ruling actually went in favor of ArcelorMittal. Forget about the legality behind that, but I think more rulings will go to the more value-adding company. That is the strategy or the way that we're going. Unfortunately, very bad for Kumba shareholders. What I've been saying for a while is Kumba makes enormous economic profit, way above the marginal cost of production, more so than most mines on earth. And there's economic grounds for governments to either to tax them more heavily than the other mines in the country, or to, have some kind of pricing contracts.
Exactly, because there's a political element here at play as well, and you mentioned it, beneficiation, essentially. But I know you don't like this deal market. ArcelorMittal is down 0.6% after it rallied quite significantly in yesterday's session. Is it a stock that you've ever owned? Is it a stock that you would own going forward?
It's a stock that I will never own. The thing is, it's majority owned by ArcelorMittal International. So you are actually only the puppet. It's only a puppet for the biggest shareholder, and ArcelorMittal will always yield to the interest of the main shareholder of the parent company, and we're always to the mercy of what the currency does. If the currency is too strong here, they cut production over here and they increase it, say in Eastern Europe, or you're always at the mercy of the biggest shareholder.
But so this doesn't mean that you don't like Kumba iron ore, so the iron ore is part of making steel.
Well, if you'd like to own some Kumba iron ore, own it via Anglo American or Exxaro Resources. Get some diversification in there. You're paying much less for it anyway, owning it through those investment vehicles.
Let's touch on your stock picks for 2012. You've given me 3. Let's start off with MTN. It seems that it's almost like a no-brainer, because one way to get exposure to the African consumer is through telecoms, and MTN being an obvious pick.
Well, the thing is, it's doing business in 22 countries at the moment. Less than a third of its operating profit is within South Africa. We know this African market, the penetration is above about 115% at the moment. So I'm not that keen on owning Vodacom. MTN, there's a lot of scope going forward in terms of revenue per client, in terms of penetration within those countries. And the biggest kicker there will be other product lines. They've only done voice, and they're only starting to get into the data market now. So sitting on something like a 5% dividend yield for 2012, reporting in February month. They haven't reported 2011 profits yet. I'm really looking forward to that results.
So MTN, then one of your picks. What about Brait? I know you like Brait as well, and that also being one of the stocks you're looking at.
Well, yeah, Brait completely changed its structure. The majority owner of Pepco at the moment, or 49% of Pepco, and
because it was sitting in limbo at one stage where people didn't really know what the role would be going forward.
Definitely. We didn't know what the company really, what the strategy will be going forward. So it's going to be a investment holding company now, but in the unlisted space. It's not going to be a Remgro, which 70% of the companies I can own myself on the bourse. It's going to be in that space that I cannot own myself, so I don't expect a discount going forward. It is actually trading at a tremendous discount at the moment. Intrinsic value, I would say, is near to $23, and it's trading below 20. So there's a little bit of a pickup there, and I think management will be able to increase NAV by 20% a year. So getting at a discount, even to that, I think we might see solid gains from
And
there.
very quickly, RMI also being your favourite stock.
Rand Mission Insurance, got Outsurance in there, it's got Metropolitan Momentum, and got Discovery in there. You've got a broad spectrum, you've got a whole insurance industry in there, good dividend yielder, and I see a lot of synergies still coming through from the MMI deal.